Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you're all having a wonderful Thursday and a great week so far. This is going to be your daily cryptocurrency market update, and it's going to be quite a jam-packed one. There's so much that I could have covered today. I've had to kind of really compress it and just look for the main things that are now driving the markets at large and predominantly focus on them. And of course, yesterday we got the Fed's rate decision of 25 basis points. And that's actually what we're going to spend quite a lot of time talking about in this video. We'll look at Bitcoin technically. We're going to go over the first sort of minute of what Jerome Powell said. He very much reiterated, I feel, the fact that they're going to continue to fight inflation and continue to be persistent in quantitative tightening and restrictive, despite Silicon Valley Bank and so on and so forth. However, the 2-year yields kind of disagrees with them on that, although they did go ahead and raise the to 5%, which the 2-year yield sort of topped out at. We will talk about that and look at it. It's also very interesting and contradictory with the amount of QE they've now done and how they've actually reversed half of what was done the year prior in QT, quantitative tightening. Very interesting as well because the Swiss National Bank, or the Swiss Central Bank, sorry, went ahead with a 50 basis point despite the Credit Suisse turmoil. So it kind of seems like this whole banking crisis is soothing. You know, my kind of prediction on the banking crisis is that they calm the waters for a bit and it really flares up when no one's expecting it, and it happens very fast. And I think we've got this window of opportunity before that happens. And ultimately, you know, this ties in very nicely with the technical analysis we've done and so on and so forth. And then, of course, in fact, where I'm probably going to start this video off is with quickly getting the Coinbase news out of the way of. Now, let's start there. Let's look at what the Fed said, and then let's go over and do a little bit of technicals on Bitcoin. Altcoins are, you know, we can even look at Bitcoin dominance, the 2-year yields, a couple of things like the dollar, which we've not looked at in a while. But again, to kick things off, today Coinbase received a Wells notice from the SEC focused on staking and asset listing. A Wells notice typically precedes an enforcement action. So Brian Armstrong is essentially saying here Coinbase is expected to get a enforcement action from the SEC, probably telling them that they can't stake. We've seen Kraken go through this. Of course, this is all flared up and brought on by Gemini with the Genesis Earn program, or the Gemini Earn program that was run by Genesis Trading. 2 years ago, the SEC reviewed our business in detail and approved Coinbase to go public. So Coinbase are a public company, and of course, this would have been approved by the SEC as coin is a security, the Coinbase stock. So our S1 clearly explained our asset listing process and included 57 references to staking. Coinbase runs a rigorous asset review process and has rejected more than 90% of assets that have applied to be listed on the platform. While we understand that this is all part of the journey to reform our financial system, which actually we've said regulation has very bullish connotations to it in the sense that we are now getting recognized as an industry, guys, a $1 trillion market cap that is about to get sent to the 10, in my opinion, with regulatory clarity. That's going to allow for a lot of adoption, certainly institutional and big money to enter the space. Anyway, it then goes on to say we are right on the law, confident in the fact, and welcome to opportunity for Coinbase and by extension the broader crypto community to go before the court. We are proud to stand up for our customers and the industry in these moments. Going forward, the legal process will provide an open and public forum before an unbiased body where we will be able to make clear for all to see that the SEC simply has not been fair, reasonable, or even demonstrated seriousness of purpose when it comes to engagement on digital assets. So actually, we did an XRP video where we actually looked at the fact that XRP one day might do quite well. We looked at it structurally. We looked at how if the lawsuit gets passed, and we actually brought up a bit from their lawsuit where actually it was a judge who was, of course, overseeing this, saying that he couldn't make sense of what the SEC were even saying. You know, he had no idea whether they were even saying Ripple was a security and what classified it to be that. or whether it was a commodity. He's literally saying, I don't know what you guys are, what you're sort of terming these as. And actually, the SEC has been nothing short of a joke. It's very ironic that we're getting regulatory sort of scrutiny at a time where ultimately, the banks are failing and so on and so forth. But anyway, that's not for this video. I will do a video later on where we're actually going to look at what's going on with the sort of Russia-China alliance, because they were talking about change for the first time in 100 years. And I think they're talking about monetary and regime change. So in the meantime, Coinbase will continue to do what it does best, build the most trusted products and services in order to advance our purpose of updating the financial system and creating more economic freedom in the world. We're excited to work with all governments and regulators around the world who are focused on putting in place clear regulations for the industry. He goes on to cite a number of other things. And for our chief legal officer, so you can go and follow this individual here at .eth. That's great. Chief legal officer at Coinbase. I'll probably give this guy a follow actually just now, because it might be worth paying attention to what's going on along with Brian. But this is going to be interesting. And again, regulations are really part of getting us to where we need to go. However, the SEC is doing a shit job of it. And actually what you've got is you've got a lot of crypto companies in the US going, we'll just go somewhere else. It's kind of like high taxes for rich people don't work. And I'll tell you why, because they'll just move abroad and come up with weird and wonderful ways to get around it. Actually, lower taxes, there's a few studies being done on this. You'd actually generate more tax revenue. And you're going to go, what? How does that work if you're not charging as much? Well, it's because people won't go out of their way to avoid it so much. Actually a trap business. Anyway, enough of that jargon. So this is interesting. We'll see how this progresses. Bit of breaking news. It's only broke yesterday when I was on Paul and Paddy's stream. Anybody who hasn't watched that, please go over to Cardano Paul's channel and give that a watch. Let's look at what happened yesterday and how this is sort of played out in markets. If we take the draw off and we go on the more immediate time frame, you can see that markets actually initially went up on this and then got a hard sell-off. As I think market, and I'm not a big fan of this, you can see grind lines are very, very important in crypto. The question is do you sort of fix this or is this now a continuation to maybe lower points? Which, very interesting, isn't it, with your fib levels? And we actually did say you're going to get pullbacks on the way here, but we think you're on your third wave. You've ran into your 0236. You've also got certainly more volume. If you look at the volume on the downtrend here, from the bear market to here, you can see that actually, you're running into this kind of more higher volume area than what you've just came through. And ultimately, once you get past this, you're going to get through this thin volume and sort of come up to this range. And we've looked at all the reasons why, inverse head and shoulders, this, that, and the other, for why essentially I think you're going to run to 35K. And I still believe that regardless of this. However, this has thrown a little bit of a spanner in the works because, of course, with Silicon Valley Bank, everyone's going, okay, Fed can't go much further, and then they've just gone another point, and they're saying another 25, and they're saying we might do one more. So they're kind of teasing. Now, they can't Jerome could not have come out yesterday, and by the way, the 2-year yields disagrees with them on this. Jerome Powell could not have come out yesterday and not done anything, because it would have fueled inflation more so than actually not doing the rate hike. And it would have fueled markets, and there'd have been this kind of, he has to, and we'll play the clip and then we'll get into it. But the 2 years saying, look, this tops out at 5%, Fed's now at 5%. Rates are pretty much done. Even if they do a 25 next, rates are over, and you're now going to have to start looking into cuts. And what we want is for rates to go sideways, for them to keep them where they are, because markets will do well under that condition. Certainly if we continue to see QE in the form of bailouts, and it looks like we are going to do that. So let's go ahead and play this clip, first minute, and then we'll wrap it all up, talk about the contradictory nature of this, and then I'll love and leave you to your Thursday, guys.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par.
Yeah, I'm not really sure it's at par. You know, if you look at the banking reserves that they need, it's like, you know, they're like 10x, some of them even more so X leveraged. 10x is a good situation. So this is the contradictory nature, right? They've provided liquidity in the form of adding to their balance sheet and helping these banks. You can see this is the downward trajectory of the Fed balance sheet, and all of a sudden it's shot up. This is something highlighted from Bilagy. Again, I think Bilagy's right. I just think he's early, and you can't put 90 days on as a time frame on that, although he's called things very, very accurately previously, like the March 2020 crash. So this is taking place, but he's also going to go on to talk about inflation.
This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound.
So they're prepared to inflate the monetary supply to bail out banks.
In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight.
I'm going to stop it there, guys, because the video's gone on for quite a while. Yeah, essentially, you know, he's still committed to fighting inflation, and that's why he's gone ahead with the 0.25%. You know, it's contradictory, albeit, you know, they're trying to restrict but also accommodate. And the Fed, there's no easy way out for the Fed. You know, they're between hell and hell, right? You either have hyperinflation on one hand or an implosion of the entire system, and mass panic, I guess. Also interesting that the Swiss Central Bank came out and hiked by 50 basis points. To round all this off to the crypto space, you know, I think rates are largely dumb. We did actually say that at the start of the year. And then we saw a readjusting of that, and then we saw a readjusting of that readjusting, which is why markets have gone up. But ultimately, this is the path that I think you're on, guys. And until we're not on it, let's go ahead and get rid of that. You know, I think there's a number of reasons to suggest Bitcoin's going to 35K and above, and I think altcoins are going to follow, and ultimately have a very positive outlook for the cryptocurrency market, despite everything going on over the next 3 to 6 months, potentially. It could be longer. You know, we could have a 24-month window, whatever it is, before the shit really hits the fan. But the shit will hit the fan in our lifetimes. It's just very hard to call. And ultimately, we're taking this opportunity that we took at the start of the year to get back into the cryptocurrency market and hopefully make some money, which we've done a good job of this so far. If you want to find out more about that and what I'm buying, where I'm buying, feel free to join the Patreon. Link in the description. Always try it out for a month. It's subscription billing, so you won't get billed till the next month. Then by all means, go ahead and check that out. You know, lots of really great things going on there, and even greater things to come for it. All I've got for you in this one, guys. You enjoyed the content, like as always, appreciate it. So as a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gentlemen. See you in the next.